How's it going, guys? Moyed here. Welcome back to another lesson. In today's lesson, we are going to be discussing how to differentiate between a pullback and a reversal. Okay, so before we get started, really quickly, guys, I would appreciate if you guys dropped a sub. We're very close to 10k subscribers, so it would really mean a lot. As well as that, guys, make sure to head down into the link in the description below. You guys can get free access to our free Discord server. So we have a free Discord server down there. Make sure to click on that and join. As well as that, guys, you are able to get free access to our lifetime membership by simply signing up to our broker, link in the description down below, and depositing minimum $500. And then after that, just message us and you'll be able to get instant access to our lifetime package. Okay, so I believe that is a brilliant deal. Now, to get into the video and not waste too much of your time, guys, so how to differentiate between a reversal and a pullback. Now, there are some very big pointers here, okay, that can help you identify this scenario. So one of the first things that I will always look at when trying to identify if this is going to be a pullback for me, if this is going to be a reversal, there's obviously going to be two major areas for you to identify this. Okay, so you're going to have your first area down here, okay, and your second area up here. Now, these aren't just any random levels. Now, my first area right here is going to be my area where the reaction occurred, okay, where the reaction occurred, and I got my primary, basically my first break of structure on the lower time frame. So on my 1 hour time frame, my break of structure would have occurred right here, okay, somewhere around here, or even here. You can consider any of these three highs your break of structure. Okay, so this would be my first level for me to identify. Now, what I will look for is what sort of reaction I got from down here. Okay, what sort of reaction that I got from down here. If my strong bearish aggressive selling gets instantly met with strong bullish aggressive selling, with strong bullish aggressive buying, sorry, okay, then this could be a pinpoint this could be a pinpoint indicator for me right here that potentially now we're being met with a lot of buyers instead, and we could potentially take this up. My second level right here would be my even higher time frame break of structure. So this would be, for example, my 4 hour break of structure. Okay, so this would be this level. I could actually bring this up even up higher a bit. So this would fully confirm my my trend change right here. So this would confirm my reversal. Now, with reversals, because the market is fractal, reversals are very subjective. So my 1 hour reversal, okay, so I could potentially have a 1 hour reversal right here. Okay, you can see that we went from a bearish market to now a bullish market on the 1 hour. Would simply just mean a pullback for us on like the daily time frame. So you have to be very careful when you're trying to see the difference between pullbacks and reversals right here. Okay, so the main thing that you want to look for, now obviously this is going to be the area, especially if you're trying to trade the reversal. Now, if you're trying to trade the reversal, you're going to have to try and identify if it was a reversal or pullback down here. This is going to be a bit harder to tell. Once the price has reached nearly around this level, okay, your second level, okay, so basically your most recent pullback on a higher time frame, okay, it will be much easier to identify. But what happens here is you're going to be missing out on this whole move, so you won't be able to catch it. So to identify this, okay, a big thing usually when a reversal occurs is because you have reached a point of interest on a higher time frame. Okay, so you've reached a higher interest on a higher time frame, whereas, for example, one of these pullbacks, we don't really have a higher we don't really have a higher point of interest right here. So this is just considered as a normal pullback. Now, with this trend right here, okay, with this trend right here, as you can see, every time it formed a new low, okay, so every time it rallied down, it would have consolidated very tiny bit, okay, and then it'll push down even more aggressively. Then once again, consolidate a bit, push down aggressively, consolidate a bit, push down aggressively. And then as you can see, as we reach right here, we're getting a bit more pullbacks. Okay, so we're slowing down as we are starting to reach our point of interest. Now, what is my point of interest, you might ask? So on AUDUSD right here, we have this monthly institutional candle. The last down candle before the up move. This is my monthly institutional candle. This is now where I can eventually, from the past 3 months where we have been in a bearish, market structure right here, now I could potentially predict a reversal into bullish market structure, simply because I'm the monthly time frame, I'm actually in a bullish structure, because this right here is just a pullback for me. Okay, this right here is just a pullback for me. I'm still in a buyer zone. I can expect to start buying from this level. So on a 4-hour or a 1-hour time frame, see, the minute I start reaching into my point of interest, my price starts slowing down. I don't have as much sellers. Each time I'm selling, I'm met with nearly equal buying. Okay, so equal buying pressure coming in right here. And then look, so we had such aggressive selling, and then once we have reached our point of interest, okay, we accumulate and the buying starts occurring. And notice how we have very, very few sellers coming into the market right here. Very, very few bearish candles in here. Okay, so we have a lot of buyers, a lot of blue candles. Okay, so a lot of bulls are in here, and this can be considered my reversal. So right here, I would actually be in reversal on the 4-hour time frame. Now, for me, this could be considered a pullback, obviously, on, like, for example, the daily time frame. Okay, this could simply be considered a pullback until I break up above here. Okay, another huge factor then is understanding where you are currently relative to the other trade range. So for example, let's say that obviously we consolidated right here, we pushed up, we created a higher high, and now we started distributing right here. Now over here, it could potentially be a reaccumulation and an upward distribution. We still don't know. Now obviously the distribution occurred and we broke to the downside. So once we broke to the downside right here, okay, once we broke to the downside, we broke market structure, and now we're selling and we're just pulling back, we're pulling back. Our expectation is to be selling each pullback. When do you start looking for the potential reversal to start buying? And that would simply be using your fib tool and trying to figure out where your discounted areas are in the market. So for example, right here, it would not make sense for me to expect a reversal. I'm going to delete all this and put it back. It would not make sense for me to, after breaking structure and confirm that I'm in a bearish structure, it would not make sense for me to try buy here, buy in any of these areas right here. Okay, because it's simply not a discounted price to buy. The banks, okay, the institutions are looking at discounted areas to buy. So this would mean that we're trying to buy off areas such as the 71, 78.6, 88.6, and this is where you can expect your reversals to occur. So the idea is, if you have a bearish trend right here, okay, and every time you're expecting a pullback, and then you have a bullish trend right here, and then you got your break of structure, and up from this point you're in the bearish market structure, I won't be looking to buy from here. I won't be looking to buy from here. I won't be looking to buy from here. I will start only looking to buy down at these levels. Here is where I can expect a reversal. Why? Because at this level, I will have discounted levels. Okay, so down here, I'll have actually discounted levels of the fib, and I'll also have I'll also have some higher probability point of interest, such as an institutional candle, whereas an institutional candle maybe here or here is not as high probable for us. Yes, it is an institutional candle, it potentially could be, okay, but the fact that it's not in a discounted area makes it much less probable for us. Okay, so in lesser words, guys, what we are looking for is simply three things, okay, to differentiate between a pullback and a reversal. Okay, the first thing is being the reaction that you get from this level. Usually once you have bearish market structure, okay, like this, okay, and you have very strong aggressive selling, you're usually instantly gonna be met with very aggressive buying. Okay, so the volume is going to be leveled right here. It's going to be met exactly with how much that, basically the exact amount of volatility that was occurring right here is going to be occurring right at this level as well. Okay, that was hard to get out there, sorry. All right, then the next thing that we're looking for is a point of interest, okay, preferably on the higher time frame. So for example, if I'm looking for, let's say, a daily reversal or a 4-hour reversal, then what I want is a point of interest on, let's say, for example, the weekly or the monthly or even the daily. If you're looking at the 4-hour, for example, it has to be a higher time frame. Okay, a point of interest for me on the 15-minute time frame, if I'm looking for a reversal on the 1-hour, usually most likely will end up just being a pullback. Yes, it might react off that 15-minute I see on the 1-hour structure. That 15-minute I see will just end up being a pullback, push down. With the higher okay, and the bigger points of interest, the bigger institutional panels on the higher time frame usually will have much more orders sitting at that level. Okay, so it will actually be able to give it that push, that volume up to actually switch the trend. Okay, whereas a smaller IC will not be as strong. Okay, then lastly, what we're looking for is to make sure that our point of interest that we're trying to buy from is sitting in a discounted area. Okay, so we have to make sure that we have nearly finished this bearish trend right here. So we have finished this complete pullback. Okay, because remember, the market is fractal, and this trend right here, okay, is a pullback of this trend. Okay, and then this trend right here, okay, is simply a pullback of this trend. So what you're doing is you're looking at each trading range relative to the other trading range. So what I'm trying to say here is we have to wait for this whole pullback to finish, and for us to consider that this pullback is finished, we want to wait for it to reach these discounted areas. Okay, we want to wait for it to reach these discounted areas, and we want to make sure that it's obviously going to be just above the buyer zone. So anything above this low right here is going to be a buyer zone for us. Why? Because this would have been my most significant recent low, okay, coming from this monthly time frame right here. Okay, so this would be the low of the monthly time frame before forming the new higher high. So this whole area would be a buyer zone for us. But when we're looking at a buyer zone, we're always going to be looking down at the discounted areas, whereas we're going to avoid anything above the 50%, anything above the 71 level right here. Okay, so I hope, guys, that made sense right here. That is how you're able to differentiate the difference between pullbacks and reversals. Now take it how you want it. Some people don't like to trade reversals. Some people want to just trade a trend. It is up to you at the end of the day. But either way, hope you guys gained some value from this video. If you guys are interested in hopping on our premium team and learning more about how we trade, getting access to our signals, our courses, our app, etc., make sure to head on to fuacademy.io and sign up there. Have a good day, everyone. Bye bye.